Hey, what's going on, my friends? It's your man, Adam Ace Spencer, here with another M1 Finance Dividend Portfolio update. On this channel, I contribute $25 every week to this dividend portfolio. The goal is to grow my money. And if you're someone out there who's balling on a budget, you ain't got much money, hey, don't let that stop you. You can still grow your money, just obviously not as much as someone else who contributes twice or three times or four times as much. However, if you do have the right stocks, if you do, and by right, I mean the best stocks, well, they may generate even greater returns that would potentially allow you to make more money than someone who might have a lot more money that they can invest. So it's not always only about how much money you're contributing, but also the stocks that you are investing in, which is why we have this dividend portfolio, because I believe in these value-based companies who have been around for a while, who are proven, and ultimately have been able to withstand the bear markets that we've seen and this current market that we're experiencing. Because as many of you guys out there know, the stock market has been getting hammered pretty badly. And even Jamie Dimon over here, who is the CEO, the Chief Executive Officer at JP Morgan Chase, has recently made some statements, some comments that might have helped to get even more people a little more worried about the market. And as you can see down here, JP Morgan Chase CEO warns of a economic hurricane. You better brace yourself. And I pointed this out in particular because Jamie Dimon, again, CEO of JP Morgan Chase, three things here actually. As I'm looking, four things. He went to Harvard, which is here in Cambridge, right next to me in Boston. He also went to Tufts, which I went to Bates. Us and Tufts, we don't really gel so well. We're supposed to have some beef between us. So, I might have to pull my money out behind Chase. I don't know if I can rock with them now. No, that's rubbish. But more importantly is the fact that, as I just mentioned, I have money behind Chase. And JP Morgan Chase, that is, they are among the companies inside of my dividend portfolio. So I'm always trying to at least stay on top of some of the relevant news with the stocks that I have in my portfolios. And so when I saw this, it immediately caught my attention because, of course, he is the CEO of Chase, a company that I have money invested in, but also he's giving us a kind of a warning, potential warning, or at least a heads up for what he expects, what he is thinking might come in the near future with the stock market. So all of that said, despite, some little short-term progress that the market has started to show at times over the past 2 weeks, there might be a day or two things look good, and then they kind of end up looking kind of not so good. I still haven't changed my plan. My strategy, everything we're doing with our dividend portfolio here hasn't changed, mainly because I believe in the stocks that we have in our portfolio. And furthermore, with this portfolio specifically, we'll continue to receive dividend payouts regardless of kind of the overall market. Now, of course, a company can reduce their dividend payouts, but that, aside from that, in which we can always remove a company from our portfolio. So if we don't believe in or agree with some of the changes they make, not a problem. Just remove them from your portfolio. But no, we're not doing that in this case. We're going to continue to ride with everyone we have in our portfolio. Now, if you're new here, you're probably like, who do you got in your portfolio? Hold on. Let's jump in to see how things have been going over the past day, where you can see we actually are down 1.20%. The past week, we're down 1.54%. The past month, we're down 0.44%. The past quarter, we're down. It jumped up to 4.21%. In the past year, we're down to 10.09%, which leads us to all time where we are down 3.91%. That gives us a current value of $2,292.35, which generates a gain of negative $56.68. And we get this gain of negative $56.68 by reducing or subtracting the market gain here, which is the stock price basically, where we're down $139. But because we have earned dividends from our stocks that amount to $82.39, when we deduct this $82.39 from our market gain. It leaves us with a regular gain of $56 or negative $56.68. So, I mean, as a whole, I'm actually, again, I've said this recently, I think last week, I'm actually happy with this, knowing how bad the stock market has been and how badly so many companies are getting beat, especially when you guys see our growth portfolio update tomorrow. This actually allows me to feel kind of good about the move that I've made, knowing that things are so bad and we're only down 3.91%. So something to consider. I know some of you are like, man, we're down again. I'm getting killed. I'm about to sell. Don't sell. I mean, of course, this isn't legal or financial advice, but I'm telling you, one of the biggest mistakes I made when I first began investing was selling the second, the market kind of took a little bit of a dive. I panicked and I sold. And of course, within a year or so, the market had more than rebounded. It made up for those losses and surpassed that. And I was not able to benefit from the gains that, many people had seen because I sold. So here we are. Fast forward the clock to 2022, market is down, I'm down, and am I selling? No. If anything, we are continuing to move forward with our drip. Oh, wait, you think I'm talking about my gear, which I do got the AdamHelper t-shirts. Not too bad. But I'm not talking about that drip. I'm talking about my dividend reinvestment plan. Having some sort of strategy that helps you to know where you're going will be huge for you. I didn't have a strategy. I didn't have a plan back in those days when I first started investing. It was just like people said, oh, just throw your money behind a stock. And I did it. And then the market tanked and I got scared and I sold and I lost all those gains or any money that obviously I was down on that I sold for. Now, here we are, like I said, 2022, the market's going down. And this time around, I am continuing to contribute $25 every single week to our dividend portfolio. Now, you guys know one of the stocks we have in here is Chase, JP Morgan, because of the intro here that I mentioned with Jamie. So you guys already know, obviously, about JP Morgan Chase being in our portfolio, but what else is in here? And more importantly, how are the stocks doing? Well, to kick things off, we have Coca-Cola at the top of our list, who is up 31.91%, followed by PepsiCo, up 25.83%, Johnson & Johnson up 16.36%, Realty Income Corp up 13.24%, Procter & Gamble up 12.53%, Newtek up 8.08%. Then in the red, we have Verizon Communications, who is down 3.37%, followed by JP Morgan Chase, down 17.20%, 3M down 23.83%. Lastly, at the bottom of our list is Innovative Industrial Properties, down 46.63%, and they are getting hammered. Now, a lot of these plays are companies who are more solidified and more proven. And then, of course, when I look at my overall portfolio and I say, who is the least proven here? Who is, in an industry that is the most volatile? Well, to no surprise, it's the company that is at the bottom of our list, which is Innovative Industrial Properties, who is it's a REIT. So they focus on real estate, but they are specifically focused on real estate within the industry. So that industry obviously has been getting hit pretty badly. We haven't really seen as much progress as a lot of people thought the Democrats were going to make with it, and it doesn't seem like it's on Biden's agenda at all, really. I mean, I don't think people thought he was really going to do much. We know, that a lot of the old folks around his age don't, that, what do they call it? The devil's lettuce or devil's cabbage or whatever. They so I wasn't really putting too many eggs in that basket, but more so looking at it as an opportunity for us to get in with this play while it's still down, while it's still cheap, compared to where I think it's going to be in 5 or 10 years when it does become legalized. Because when it does, I think stocks like Innovative Industrial Properties will take off. So I'm not panicking right now when we are down so much. If anything, again, I look at these as an opportunity to accumulate as many shares as possible at as low of a price as possible. So when it's down, when the market's not doing well, we don't want to panic sell and freak out and jump ship. Instead, look at it as the opportunity to buy at a sale, at a reduced price. If you wanted to buy a Rolex watch, you're not going to panic when there's a sale. If anything, you're going to panic because you need to come up with the money so that you can take advantage of that opportunity. And that's basically how I'm looking at our dividend portfolio with all of these plays in here that are, down, which right now, as you can see overall, for all time, we only have 4 stocks out of our whole portfolio that are in the red. Everyone else is in the green, but it's because of this play down here that our overall portfolio is still in the red because of how drastic this is compared to 3M, JP Morgan Chase, and Verizon. Again, this is that kind of most growth like play that we have in our portfolio, meaning it's the least proven, the most volatile. It's in an industry that's not fully fully legalized, stuff like that. So we know there's going to be a lot more fear that kicks in there, and it's going to be a lot more volatile and susceptible to getting hit badly when the market is doing poorly. And we're experiencing it right now. Like I said, it's part of I want to say part of the plan necessarily, but it is, in which, like I said, I knew at some point the market was going to not be as hot as it was at the end of last year, and I expected things to come down. The question is, at what point does it stop going down? That's what we don't know. And some people, as I mentioned that warning at the beginning, some people do think the market as a whole will continue to get worse. So I say all of that to just remind you guys, this is a marathon and not a sprint. We're not panicking. We're not freaking out. And we're going to continue to stick with our plan of contributing $25 a week to this portfolio. Now, lastly, I wanted to jump over into the activity and let you guys finish up last month. How did May go with our dividends? And you can see when we scroll down, it first began on May 2nd with JP Morgan Chase, who paid us $1.57, followed by Verizon Communications, who paid us $2.73. Then we had Realty Income Corp pay us 79 cents, followed by Procter & Gamble, who paid us $1.30. So not too shabby. What's that? $1, $2. It's about $2 there, a little more. And we got 4 or 5, about $6 and some change that we have received in dividend payouts from our dividend portfolio. Now, before we jump ship, I do want to let you guys know I actually have made some videos speaking about my credit union, which I believe is one of the best banks or credit unions in the country. I'm talking about DCU, Digital Credit Union, who actually pays a 6.17% interest on the first $1,000 that you have inside of your savings account. So one little trick, and I'm throwing this out here at the end of this video because I know a lot of people like to jump ship by now. So if you're sticking around, good for you. Take note, because one little trick that I've been able to benefit from, not really a trick, but if you have a LLC or if you have a DBA, basically if you have an EIN outside of your social security number, you can probably potentially open up multiple bank accounts with credit unions or banks. And being that DCU pays that 6.17% on the first $1,000 in your savings account, not only do I have my personal account, but I have my DBA account there, and I have my LLC account there, in which all of those have that minimum of $1,000 in the savings, and I'm able to get paid that 6.17% interest on all of them. And just thinking about, I think, and technically, I think 2 of them weren't the full 1,000 the whole month last month. But ultimately, when I added up my dividend payouts from last month for those accounts, they actually surpassed what I just read to you from the activity that we received in dividend payouts from this portfolio. Now, of course, it shouldn't be that much of a surprise. Again, each of those those accounts have a minimum of $1,000. So if you add up 1,000 plus 1,000 plus 1,000, that equals 3,000. So technically that is more than what we have here in our dividend portfolio. And so it shouldn't be that much of a surprise that we are receiving greater dividends or interest payments over there. But again, it's still something to keep in mind as a way to help you with growing your money, or at least helping you keep it afloat during these times when we know inflation is not our friend and it's kicking in and, kicking everyone's butt. So I wanted to share that little tip with you guys, something to keep in mind, something to consider. Go check them out, DCU, Digital Credit Union. You do not need to be here in Massachusetts to open an account with them. So I'm going to wrap it up there, my friends. I hope you guys found this video helpful. Again, stick to your plan. If you don't have one, come up with one. Decide on something, right? I have our dollar cost averaging strategy where we just continue to invest $25 every week, regardless of how well or how bad the market is doing. So, my friends, I hope you guys found this video motivational, encouraging, helpful. If so, definitely smash that like button. And of course, subscribe to the channel. Hit that notification bell so you guys can stay up to date on all of our latest and upcoming video content. But all right, my friends, you already know what it is. I gotta keep it moving, but I'll see you in the next video. Peace.